Some companies want revenue and cost of goods sold tracked in the general ledger by item. Others want revenue and COGS tracked by customer, customer type, or major account relationship. There is no universal right answer. It depends on the company's chart of accounts, management reporting preferences, and internal accounting policies. Carillon gives the accounting team that choice as part of the standard posting design. A system parameter determines whether revenue and COGS are posted by customer or by item. Organizations that need revenue from different customer types to post to separate income and COGS accounts, such as retail, wholesale, distributor, or specific major customer with its own general ledger presentation, can configure Carillon accordingly. The revenue and COGS accounts are stored on the customer or item record, depending on the selected posting method, and are applied when the invoice is posted. If branch accounting is enabled for that company, branch-level wildcarding further refines the posting assignment, so revenue and COGS post to the appropriate branch accounts. That flexibility does not limit profitability reporting. No matter which method is used for posting to the general ledger, Carillon profitability reports can still show revenue and COGS by the dimensions users care about, including customer, item, salesperson, branch, project, or ship to address. Power BI can query the same posted invoice line data directly, so management reporting does not have to match the general ledger account design exactly. And because the GL account assignment does not depend on a user-applied reporting tag, the posting is not affected by missing or incomplete segment data. NetSuite's standard account selection model works differently. Oracle documents that item records contain the accounting fields used for item sales and item cost. The item record includes an income account field to track item sales revenue and a COGS account field to track the cost of the item. Oracle also documents that a default COGS account is set at the company level and can be overridden per item on the item's accounting configuration. In NetSuite's standard item account model, Oracle's documentation describes income and COGS account selection through item accounting fields, not through a standard customer-level posting parameter. Customer-based GL treatment can be handled through segmentation, reporting design, or Suite GL customization, but that is different from Carillon's standard customer versus item posting option. For customer-level segmentation, NetSuite's approach is dimensional. Class, department, and location segments tag transactions so they can be filtered in reports. A NetSuite partner's published implementation guidance makes this explicit, advising customers to avoid creating separate revenue accounts by customer or product type, and to use class segmentation instead. That approach carries an operational risk that account-based posting reduces. If a transaction is saved without the correct class or segment value applied, it can appear as blank, unclassified, or be excluded from reports that filter on that dimension. The GL account still receives the posting, but customer-level visibility depends on the segment data being complete and correct. NetSuite can go beyond its standard item account model through Suite GL. Oracle describes Suite GL as a set of features that lets users customize general ledger processes, including changing line-level GL impact of transactions. Oracle's Custom GL Lines plugin documentation states that the plugin changes the general ledger impact of standard and custom transactions by applying custom transaction logic that adds lines to the NetSuite GL impact page. That is powerful functionality, and it should be acknowledged. It is also customization, not the same thing as a standard accounting parameter that lets the user choose customer-based or item-based revenue and COGS posting. Oracle also documents that custom GL line impact on reports may require report customization, such as adding a custom GL column or filter in the report builder. That reinforces the point. Suite GL is a powerful customization layer, but it introduces custom reporting and audit considerations that are different from a standard posting parameter. The distinction matters for companies whose chart of accounts genuinely requires customer-based revenue or COGS accounts. The difference is not whether NetSuite can be customized to produce a different GL impact. With Suite GL, it can. The difference is whether customer-based versus item-based revenue and COGS posting is a standard accounting setup choice. In Carillon, it is. In NetSuite's standard model, revenue and COGS accounts come from the item, while customer-level analysis is handled through segments, reports, or customization. For organizations that want this choice built into the posting model, rather than added through custom GL logic, Carillon's design is simpler, more direct, and easier to explain to auditors and financial users.